If you've ever bought a commercial property before, such as a small warehouse or a retail shop, you would have heard this term called going concern. Not growing concern, but a going concern. In this episode, we're going to actually go through what going concern actually means and how it could be applied to your scenario. Welcome to What Schools Should Have Taught You, a podcast where I share with you all the lessons you need to know about building true wealth. I'm Iannuzzelli, and we're going to talk about going concern, not growing concern.
Everything school should have taught you in one place. With a property portfolio of over 17 million and an accountancy firm of over 16,000 clients, as well as being an accountant to some of the wealthiest people in Australia, Jeremy Iannuzzelli will be sharing his lessons on everything school should have taught you so you can build the life you want.
Now, going concern, I suppose in context with commercial property, is a statement or a phrase that gets thrown out there by potentially your buyer's agent, your accountant, or potentially a solicitor. But what does it actually mean? Now, it's all to do with GST. It's all to do with how we account for GST on both the purchaser and the seller's side. The tax office has created some provisions around it, so it's important to understand what this provision is. Now, in normal circumstances, when you're buying a commercial property that's already tenanted, it means the commercial property already has a going concern in place, which means it's carrying on the same enterprise. And that enterprise is renting the property out to tenants. Now, what does that mean when we're carrying on the going concern or carrying on the enterprise? It means that there's no GST applicable to the sale. Why? Because the purchaser doesn't have to remit the GST back from the tax office and the seller does not have to pay the GST. So it's just cleaning up a lot of the administration in the background. You don't have to pay it to the ATO. The purchaser doesn't claim it back. ATO's fine. They're not having to deal with all the red tape and the bureaucracy that's involved. But when is a going concern not met in the commercial property context? Well, you might have a property where you're buying it as a vacant possession property or untenanted. It's not carrying on the enterprise of renting that particular property out to a tenant. There's no valid lease in place. So therefore, 10% in normal circumstances is added on top of the purchase price. So you may have bought that property for $800,000. The seller will then say, well, I'm charging you an extra 10% of $80,000. The purchaser needs to come up with this extra $80,000 of cash to then get that back potentially remitted via their business activity statement, which is a statement that you must lodge either quarterly, monthly, or annually in some circumstances. So if you meet the going concern condition, a valid lease in place, the commercial property carrying on its enterprise of renting out, that $80,000 is not applicable. The ATO don't need to collect the 80 grand and they don't need to pay you the 80 grand. But if the going concern condition is not met, again, with commercial property as the context, then $80,000 will need to be paid to the tax office once the seller receives it from the purchaser, and the purchaser will claim that $80,000 back from the ATO. So there could be some short-term cash flow deficiencies, and I have seen it in many circumstances where the purchaser is scrounging around for that $80,000 where the bank not necessarily will fund it because they know you're going to get it back as part of your business activity statement or when it's lodged on a monthly, quarterly or annual basis. So again, going concern as a context is the carrying on of an enterprise. In the commercial property sector, carrying on the enterprise is the property being rented with a valid lease in place. No GST is applicable to the purchase and sale. If there is no tenant in place, no valid lease agreement, and the seller is registered for GST, they've got to charge you that GST. You've got to come up with that extra 10% to pay to the seller or pay directly to the tax office for you to then claim that back business activity statement time. So be very careful, educate yourself on what the going concern is, speak to your accountant, speak to your solicitor, get an understanding of potentially the cash flow requirements involved if the going concern condition is not met, so you don't get caught out with a cash flow burden to come. I'm Jeremy Iannuzzelli. This is what schools should have taught you. I look forward to seeing you in the next episode where we do talk about the going concern issue in light of self-managed super funds.